Dhananjay Sinha is joining us right now. He's head of research with Emkay Global Financial Services. Dhananjay, good morning. Good to have you with us here. It's always a pleasure. Earnings are coming in, and you got this entire global thing also panning out. Once again, commodities looking slightly weakish. Dhananjay, I think you need to wear your mic. I think it's fallen off. Okay, let's just wait for Dhananjay to mic up. And the market, by the way, is at the day's high. 12 points, but well, that's a day high. Okay, Dhananjay is back with us. He's mic'd up. Dhananjay, so what is the dominating driver for markets? Is it going to be earnings? Is it going to be the global factors? It's always a mix, but what's the dominating driver according to you? Or is it the election results or the next set of exit polls from Bihar?
So I think if you look at the markets over the last few months, there has been a certain amount of retrenchment based on what was supposed to be global developments. There were some concerns on what would Fed do. I think we all know that Fed has actually pushed the rate or lift off forward, and we had concerns on China with respect to the slowdown and the yuan devaluation. So I think that was actually leading to a sort of a correction that was happening for past several months. What essentially turned things around essentially is the fact that you had Fed testimony telling us that the liftoff for Fed rate will actually be postponed. So the consensus now has shifted to next year in terms of the first rate hike, and also that China, in response to the volatility in the stock markets there, also came up with some sort of a stimulus, which sort of provided some stability to the market. And I think based on that, given the context that in our markets there were sharp corrections happening ahead of that, I think there has been a bounce back after that steep correction. So I think that has been very critical. Going forward, what will be important is the earnings season, and we have to really see whether there are legs to the rally that we have seen over the past, let's say, few weeks or not. And essentially that will depend on two things. One, how strong is the earnings performance of the Indian corporates? I think it is still very premature in terms of making a conclusive judgment, but for the data that has come around or the results that have been announced, it does appear that top-line growth for companies in the non-oil, non-bank sector is still contracting significantly, and aggregate data is somewhere around minus 20% or so. And whether there could be a lagged impact of decline in commodity prices earlier to margins, operating margins, but eventually we'll have to see whether that sustains over a period of time, number one. Number two, whether even in the current quarter, whether it translates into profit growth, because what we are also observing is that other income for companies has actually been declining, so that can actually neutralize the bounce that we are seeing, or an uptick that we are seeing with respect to margins. So those are the things that is one important variable that will need to be looked at. And I think what will also be relevant from a sentiment standpoint is what will be the result of Bihar election. And as of now, the market is sort of positioned in such a way that it is assuming that there will be the BJP will come to power in the Bihar Assembly election. There are only two rounds of election that has happened. There are a few more to go. I think two more to go, and I think the result will be announced early. I think 9th of November, and I think that's when things will come out. But I think given the context that it could be a very close call, I think the volatility around that event can be fairly high. So these are the two things that will need to be watched for. As of now, I think that's the short-term outlook.
So, but you said that market is pricing it. You didn't say pricing it, but market is expecting the BJP win. BJP wins there.
Yes.
Although most polls, etc., which we've seen so far, they all show a very close race. I mean, actually, some put Mr. Nitish Kumar ahead.
Right.
So it's a hope or an expectation, rather a hope still, right?
So I think the opinion poll or the polls that were done earlier were sort of mixed, but I think they were there were few polls that were predominantly giving a stronger bias in favor of the BJP or the NDA. So I think if you look at the market buzz or sentiment, I think what I am hearing is that people do believe that the risk is on the upside for the BJP. I think that's how the market is positioned. What may be the eventual outcome, that only time will tell. But as the things, as the time is nearing the announcement date or result announcement date, I think things are getting much more mixed up at this juncture.
So so let's just take the lesser expected view, which is that the BJP loses Bihar.
Yeah.
What will that mean? Will it mean, the market reaction will depend on what they make of the, what they take away from the loss, if it were to be a loss.
Right.
So it can be positive, it can be negative.
Right. So
why does it necessarily have to be negative for the market?
So the thing is that clearly the way the market is considering this Bihar election is that if the Bihar election is won by the BJP and the NDA, it is possible that it can actually have a spillover effect on other elections that may be lined up going forward. West Bengal, UP, etc. Wherein if they have greater say in the state governments, various state governments, they will have better representation in the Rajya Sabha, and it will be easier for the government to actually pass through some of the bills it is finding difficult to get passed. So I think that's a very critical thing, and I think the market is also assuming that a stronger presence in the Rajya Sabha will enable the government to take stronger reform measures, which will be good for the economy, good for the companies, good for corporate results, and that's the extrapolative extrapolative story that the market would tend to believe. So if the outcome is actually quite different, and let's say the Grand Alliance wins, then it can actually create a certain amount of volatility because the market is expecting quite differently. So it is possible. So my sense is that the upside to if the BJP wins is lesser than the downside if the BJP loses. So I think this event can trigger a certain amount of volatility because I think that's an important hope that the market is building at this juncture.
Okay, fair enough. Let's just go back to earnings. So you're expecting earnings to be disappointing, right? Broadly.
So
there's no pickup.
Yeah, there is no pickup. So at the end of it, what is important is whether sales growth strengthens or not. What we are basically looking at over the last 3 quarters, starting from December quarter, the top line growth for companies have actually been contracting. So if you consider Nifty, for instance, in the past 3 quarters, the average growth for top line for non-bank, non-oil companies is in the region of minus 10%. For the data that has evolved up till now, it does appear that for the similar nature of companies, the top line growth is in the region of minus 20 and lower than that. So eventually, what is important is that whether earnings will come out of this will depend quite significantly on whether the positive spillover from lower commodity prices on raw material to sales ratio is strong enough to counterbalance the decline in top line growth. Number one. Number two, whether you have sufficient amount of other income growth that can actually propel the PAT growth. So I think these are 2 important things. I guess what is important is if the top line growth has to, if it doesn't come around strongly, then it is possible that the margins that you might get or benefit that you get from low commodity prices could actually be passed on. And you see that, if you look at the WPI, inflation is still in a deflationary position, which means that the pricing power for the manufacturing sector in general has actually remained pretty weak. So I think that's the outlook for the corporate sector. A lot will, and also you look at, if you look at the export-import data, the last month, the last data point that we got also showed that the export growth actually contracted by 24%, and import growth imports also contracted by somewhere around 25%. On aggregate over the last 6 to 9 months, the exports have actually contracted. And services exports have also been growing very modestly. On aggregate, goods and services exports have actually been very modest. So overall, hence also that reflects in the fact that top line growth is actually contracting. Why is it important? Because unless you have a strengthening in the top line growth, you would not expect people to or companies to go ahead and do capex. Companies may still resist from going ahead and do and expanding capacities when the asset utilization is actually low. So what will need to be watched is that whether or when the top line growth actually turns around. Maybe that's about a couple of quarters away. But I think, at least till that time, I would still be very watchful in terms of what is the details with respect to the corporate performance and the nuances that are embedded within that. The government is trying to do something with respect to higher capital spending, but I think this is very sector specific with respect to roads and maybe certain amount of rural spending government is trying to do. But I think that's that while that is a good thing, it may not really be strong enough to really move the needle as far as the top line growth for companies are concerned.
Fair enough. What are your picks now, Dhananjay? Top picks, absolute, in terms of not relative but absolute.
So one top pick is, as I mentioned, is Tata Motors. Tata Motors actually corrected something like 50% from the top. Currently, somewhere around 370. We recommended this around 300 rupees. So I think there is further legs to the further run-up that can happen. So we are expecting somewhere, our target price almost like 40% above this. So that's one thing that we like. So the other topic that we have mentioned is ICICI Bank. ICICI Bank has also undergone a sharp correction in the past phase. And what we are seeing is that there is certain amount of stability that has evolved over the past few sessions. And people have sort of have started to look at some of the banking names. I see some interest with respect to state-run banks, but our preference continues to be in favor of the private sector players. So ICICI Bank is something that we like. So those are the two major picks that we have at this juncture.
Okay, fair enough. Anything smaller names, mid-caps, any interesting ideas?
So SKS actually, SKS announced its results yesterday. It was sort of more positive with respect to the quarterly results. The expectation was sort of not so robust, but I think the results have actually been on the positive side. It has beaten expectation. It's a company which is into microfinance, has been growing rapidly, and notwithstanding the fact that it is into microfinance, the NPA issues hasn't been that concerning. So that's another thing. UltraTech announced results yesterday. So that's another, from a medium-term perspective, I think that's another stock that we like. In the near term, there are concerns with respect to cement prices. Those are, we have seen some depressed prices in the northern region, but I think our story is that over a period of time, its utilization will actually improve, and its additional capacities that it has, given its acquisition and new capacities, as the utilization improves over a period of time, it could actually start positively impacting the margins and operating performance. So I think that's another one that we like.
All right, fair enough. Thanks very much, Dhananjay. Tata Motors, ICICI Bank, SKS, Micro and UltraTech there with Dhananjay. Thanks indeed.